Hi guys, welcome to the Thinking Crypto channel. I hope you're doing well. On this channel, we cover the crypto news and we interview many of the people who are building and investing in the asset class. Today, I wrapped up my interview with Max Keiser. That interview will be published tomorrow. So go ahead and hit that subscribe button as well as the thumbs up button. Guys, some very negative news around gold here. Here's the headline. Gold versus Bitcoin, $2.8 billion fake bullion scam highlights Bitcoin's benefits. A huge corruption scandal involving Chinese loans backed by fake gold is pressuring its supporters to defend it against unforgeable Bitcoin. So we all know Bitcoin is on the blockchain. You can't duplicate it. You can't try to forge something here and make up a fake Bitcoin. Sure, there's been forks of the Bitcoin blockchain, but the network is so open and transparent and decentralized that you are able to readily and easily identify something that's fake. With gold, it's not that easy to do that. You can make up fake gold bars, right? People have taken lead, steel, copper, and they just gold plate it and they sell it as a full gold bar, and it's not. So that is an issue, and it is a argument on the side of Bitcoin that look, it's all on the blockchain, and Bitcoin is a better store of value. It's gold 2.0. Now, I'm not anti-gold. I hold gold in my portfolio. And I know many people who do. So this is not an anti-gold, but it's a matter of saying Bitcoin is a better store of value, right? Gold 2.0. So let me give you some more details here. The Bitcoin versus gold debate rages this week as reports reveal fake bars fueled a $2.8 billion corruption scheme. As Chinese media outlet Kaizen reported on June 29 via Nikkei, a loans deal between Chinese financial institutions and Wuhan King Gold Jewelry with gold as collateral fell apart when it became known that the gold was gilded copper. That is not good, guys. They also go on to say here that potentially there's tainted gold bars and gold reserves in central banks. So if all this information, there was a full audit of gold bars, I think we would see the price of gold drop a bit, right? Because there's a lot of fake. It's not as much as the circulation as they expect. So like I said, for Bitcoin supporters, gold's authentication problems form a major argument against investing or holding the precious metal. Now, I still think people are going to hold gold. I still hold gold because you diversify, right, to reduce the risk. Now, however, Mr. Goldbug himself, Peter Schiff, constantly tweeting about, Bitcoin is crap, it's a scam, blah, 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 gold is better. He, of course, is silent on the issue. You go to his Twitter profile, crickets. But of course, there's tweets, bashing Bitcoin. So he's a hypocrite, he's a clown, and he's constantly, I think it shows his weakness. He's constantly tweeting about Bitcoin. So it's like, if gold is what it is, why would it be afraid of Bitcoin, right? But he is definitely afraid that money is going to shift from gold into Bitcoin and crypto. So that's why he's like really, so loud about it, right? If you don't feel threatened by something, you ignore it. But if you do feel threatened, right, you're very proactive in trying to change the narrative. And this news is not good. It's once again, it gives more of an argument towards Bitcoin than gold. So let's see what comes out of it. There's probably more fake stuff, and they mentioned in the central banks more fake gold bars, and we'll have to see what type of accountability comes to this, because there are companies looking to tokenize gold by putting it on the blockchain. And I think if they do that, you'll get a lot of more fake gold bars and bullion exposed. So we'll have to wait and see. Another article here, institutionalized crypto. Big Four analytics tools may lure in traditional investors. Big Four firms introduce data analytics tools to help manage crypto and digital assets for institutional clients. So we've talked about it on this channel. Essentially, you have all of these big institutional players coming in, like Fidelity and so forth. And guess what they're going to want? Essentially the same setup they have in the traditional markets, and that's data analytics, auditing, security, accounting, all of that. And that means the other traditional firms like KPMG and many Ernst & Young are going to start coming into the market. guys. So it further validates the crypto market and the asset class. So let me give you some details. Once dominated by young and savvy retail investors, the cryptocurrency market has seen increasing interest lately from institutional investors and large fintech firms. For instance, Grayscale Investments most recently added 19,879 Bitcoin to its Bitcoin Trust, bringing the firm's total volume of the predominant cryptocurrency close to a whopping 400,000, guys. 400,000 Bitcoin. Talk about a bag, a portfolio there. Now, in order to manage all of that, right, and for all their clients and so forth, what do you need? Big data, auditing tools. Who provides that? Those big four accounting firms, which service the traditional markets, but now they're going to serve the crypto market, guys. This is big. The investment firm further noted in a tweet on June 25th that it is managing $4.1 billion worth of digital assets. It's also worth noting that leading payment provider PayPal may soon be incorporating cryptocurrency options. While some individuals in the crypto community may cringe at the thought, recent findings from Big Four firm KPMG explain that institutionalization is needed now more than ever in order for cryptocurrencies to meet their full potential. I agree with that. They're going to build and take it to the next level and market it to the mainstream. A KPMG document title, listen to this, guys: Cryptocurrencies are here to stay. So bullish. And this is from KPMG. Nothing to do with investments or crypto, guys. They existed before the market. Here's a quote: institutionalization is the at-scale participation in the market by small and large entities within the global financial ecosystem, including banks, broker-dealers, exchanges, payment providers, fintechs, and service providers. They're going to provide the service needed, guys. There's demand, and the supply is going to come, and the service is going to come from these big four auditing firms. And more folks are going to get in. It's just a matter of time before Google and Amazon and all these people get in. We're seeing them coming one by one. Capitulation is happening, and those who have been silent are making their moves. And, the biggest 180 in capitulation, I think, was JP Morgan. Just recently, we found out they are going to be offering banking services to Coinbase and Gemini. They released a report saying Bitcoin has longevity, has staying power because it survived the March market crash. This is a complete 180 from what their CEO, Jamie Dimon, said, that Bitcoin is a fraud. You'll lose your money. It's a scam. Big time turnaround, guys. So future of the market's very bright, and the institutional players are getting in. We got to wait through the cycles, and we will see higher prices, and the market will continue to grow. Guys, what do you think about this news, especially the fake gold and Mr. Peter Schiff very silent about it, so showing his hypocrisy? And we'd love to hear your thoughts and comments. Leave them below. Thumbs up. Please subscribe, and I'll talk to you all later.